Welcome to the Deep Dive. We're diving into the world of algorithmic trading today.
Oh, cool.
Yeah, we've got excerpts from The Ultimate Guide to Successful Algorithmic Trading.
Mm-hmm.
And we're not going to, turn you into some coding master in an hour or something.
Right,
but
yeah.
we want to sort of unpack the ideas behind algorithmic trading and bust some myths.
Okay.
And maybe even see if there are some advantages you might have as just like a regular person.
Yeah, like an individual investor.
Exactly.
Yeah, one of the things that jumps out at me from this ebook is it's really focused on mindset.
Oh, interesting.
Like before even getting into the technical stuff, it's about, building a system that reflects like your goals and your risk tolerance and all that.
Yeah.
It's not just about, churning out code.
I see.
Yeah.
So
I think that's really...
It's more realistic.
Yeah, exactly.
Yeah.
And the author's personal journey is a great example of this.
Oh, tell me about that.
Like he was chasing all those like trading guru promises.
Mm-hmm.
And he got really disillusioned by all the hype.
Right. Right.
Until he discovered that like a systematic approach was more his style.
So it was a better fit for his personality.
Yeah, exactly.
Yeah.
And that really makes you think, what is it that drives people to trading in the first place?
Yeah.
And how does that affect like how successful they are? It's interesting.
Yeah, it is interesting.
It's fascinating how psychology is such a big part of trading, but it's often overlooked.
Right.
Yeah.
You cannot really talk about it too much.
You can have the most like fancy algorithm ever.
Yeah.
But if you're motivated by greed or fear,
Oh, I see.
you're probably going to make impulsive decisions and sabotage your whole system.
Right. Yeah.
Yeah.
That makes sense.
Mhm.
That reminds me of something that I read in here.
Oh, yeah.
It said that over 90% of traders who just rely on technical analysis actually end up losing money.
Oh.
Yeah. I was kind of shocked by that.
Yeah.
Do you think that means that technical analysis is just like inherently flawed?
Hmm.
Or is there something else going on?
Well, I think technical analysis can be a useful tool,
Okay.
but people often misuse it.
Oh, okay.
They get caught up in trying to predict every single move in the market,
Uh-huh.
chasing patterns without really understanding what's going on.
Right.
Algorithmic trading, on the other hand,
Yeah.
it helps us shift away from subjective interpretation
Okay.
and to focus on data-driven decisions.
I see.
Yeah.
So instead of trying to time the market perfectly,
Right.
we're building systems that take advantage of recurring patterns
Exactly.
and statistical edges.
Yeah.
Okay.
And that's where backtesting comes in.
Oh, yeah. Tell me about backtesting.
Imagine like having a time machine
Okay.
that lets you test your ideas on historical data.
Wow.
That's like the power of backtesting. We can objectively figure out the strengths and weaknesses of a strategy before actually risking real money.
That would be awesome.
Yeah.
Yeah. For someone like me who tends to second guess every decision I make.
Yeah.
But backtesting can't predict the future, right?
No, definitely not.
Okay.
You're right.
All right.
And that's why it's really important to pick the right market.
Hmm.
This ebook makes a case for futures markets,
Okay.
especially the micro E-mini stock indexes.
Uh-huh.
And it says those are particularly good for smaller traders.
Oh, interesting.
Yeah, it compares it to picking fruit.
Okay.
So finding markets where you have a chance to outmaneuver those big institutions.
The big guys.
Yeah, exactly.
Yeah, I like that analogy.
Yeah.
The book talks about less efficient markets,
Yeah.
like the micro E-minis,
Right.
and how those offer more opportunities for us little guys.
Yeah.
Is that because they're less crowded?
That's part of it, yeah.
Okay.
Like imagine trying to compete with a giant hedge fund using super high frequency trading algorithms.
Yeah.
In a market like the S&P 500,
Uh-huh.
it's like bringing a knife to a gunfight,
Yeah. You're going to lose.
pretty much.
Okay.
Yeah.
So it's all about choosing your battles wisely,
Right.
finding markets where you can actually have an advantage.
Exactly.
Okay, that makes sense.
Yeah.
One thing I wanted to ask about is leverage.
Oh, yeah.
So how does leverage work in these markets?
Well, with the micro E-minis, for example,
Yeah.
you can control a big position with a relatively small account.
Okay.
But as the book says, leverage can make your profits bigger,
Uh-huh.
but it can also make your losses bigger.
Right. Goes both ways.
So you got to be really careful with risk management.
Okay.
Yeah.
So let's get into the nitty-gritty of building a strategy.
Yeah.
This ebook breaks it down into a bunch of steps,
Yeah.
starting with backtesting,
Yeah.
data selection, and avoiding bias.
That's right.
This seems like where the science part of trading really comes in.
Absolutely. It's all about building a really strong foundation for your system
Okay.
and selecting the right data, cleaning it up and making sure you don't introduce bias when you're backtesting.
Right.
It can make a huge difference.
I see.
Even small mistakes in this phase can really mess up your results.
So like building a house on a bad foundation.
Exactly.
You can make it look pretty,
Yeah.
but it's going to fall apart eventually.
That's a great analogy.
Blaze up.
Speaking of shaky foundations, though,
Yeah.
the ebook also warns us about backtests that look too good to be true.
Oh, really?
There's this thing called overfitting.
Yeah, I've heard of that.
It can trick you into thinking you've got a winning strategy when you actually don't.
So how does overfitting happen?
It's when you adjust your strategy,
Uh-huh.
like so much that it fits perfectly with the past data,
Oh, okay.
but then it fails miserably in real-time trading.
Right.
It's like memorizing the answers for a test
Got it.
instead of actually learning the concepts.
You might ace that one test.
Yeah, but you're not prepared for anything new.
Right, exactly.
So you got to find a balance between optimizing for the past
Uh-huh.
and making sure that your strategy can adapt to the market changing.
Yeah, because the market is always changing.
Always.
All right, that makes a lot of sense.
Mm-hmm.
Let's talk about picking a trading platform.
Oh, yeah, sure.
The ebook compares TradeStation, multi-charts, and Python.
Right.
So for someone like me who's just starting out,
Yeah.
what platform would you recommend and why?
Each platform has its own pros and cons.
Okay.
So it really depends on how you learn and what your goals are.
Okay.
TradeStation, with its easy language, is known for being user-friendly.
Okay.
So it's a good place to start.
Right.
Kind of like training wheels.
Yeah.
Yeah.
I like that.
Then you got multi-charts,
Okay.
which uses power language.
Uh-huh.
It gives you similar stuff, but with more brokerage options.
Yeah.
So it's like the next step up.
Got it.
You get more customization and flexibility.
I see.
Yeah.
Then there's Python.
Yeah.
That seems to be like the language everyone uses for data science these days.
It's everywhere.
Why is it so popular for trading, too?
Python is super versatile.
Okay.
It's got all these libraries and tools
Uh-huh.
that are specifically made for financial analysis and trading.
Wow.
It's like a Swiss Army knife for building and testing strategies.
So it's more powerful,
Yeah.
but maybe harder to learn.
It might be a steeper learning curve.
Okay.
But the cool thing is,
Yeah.
you can use those Python skills for other stuff too,
Oh, that's good.
not just trading.
I see.
It's a good investment.
Makes sense.
Yeah,
Sounds like there's a platform for everyone.
absolutely.
That's good.
Yeah.
But no matter what platform you pick,
Mm-hmm.
this ebook says it's really important to look at more than just profit when evaluating a strategy.
Oh, absolutely.
It talks about drawdown and the Sharpe ratio and all these other metrics.
Yeah, those metrics help us understand risk-adjusted returns.
Okay.
It's not just about how much money you make,
Right.
but how much risk you're taking to make it.
Uh-huh.
A strategy with huge profits, but also wild swings and big drawdowns, might not be good for someone who doesn't like risk.
I see.
Yeah.
That makes sense.
Mm-hmm.
This ebook had this thought experiment I thought was pretty cool.
Oh, yeah. What was it?
It compares two hypothetical strategies.
Okay.
One makes a lot of money, but it's super risky.
Mm-hmm.
The other one is more consistent, but maybe not as exciting.
Interesting.
Which one would you choose?
Personally, I'd go for the consistent one.
Really?
I'm all about balance,
Okay.
risk and reward.
Uh-huh.
I'd rather have something that steadily makes money
Yeah,
and minimizes those drawdowns.
I see.
I want a system that can handle anything the market throws at it.
Yeah, you don't want to be caught off guard.
Right.
So it's like choosing between a flashy sports car
Okay.
that might break down any minute or a reliable SUV that can handle anything.
I like that analogy.
Yeah.
I'd take the SUV every time.
Me too, probably.
Yeah.
So we've got this strategy. We've back-tested it.
Right.
But it's not enough for it to just work on historical data, right?
That's right.
It needs to be strong enough to handle the changing market.
Absolutely.
And that's where stress testing and walk-forward analysis come in.
Exactly.
So walk me through those.
Okay, so think of stress tests as like putting your strategy through the ringer.
Okay.
Imagine you had this strategy back in 2008.
Oh, during the crash.
Yeah, would it have survived?
Oh, good question.
That's the kind of toughness we're looking for.
I see.
Then there's walk-forward analysis
Mm-hmm.
that lets you simulate how your strategy would have done in real time
Okay.
as new data came in.
So it's like time traveling with your trading system.
Yeah, exactly.
Wow, that's cool.
You get to test how adaptable it is over different market periods.
That's awesome. So we're basically taking our strategies out of the theoretical world
Right.
and into the real world.
The unpredictable world of the market.
Exactly.
Yeah.
And even with all that testing, there's always uncertainty, right?
Always.
That's why diversification is so important.
It's crucial.
So it's like the old saying, don't put all your eggs in one basket.
Exactly.
But for algorithmic trading.
Yeah, even the best strategy can have bad periods.
Right.
By diversifying, we can smooth out those returns
Okay.
and reduce the impact of any one strategy doing poorly.
So how do we do that effectively?
We need to understand correlation.
Okay, what's that?
It's how different markets or strategies move in relation to each other.
Oh, I see.
We want to combine strategies that don't move in the same way.
Yeah.
That way, if one market crashes, our whole portfolio doesn't go down with it.
It's like building a team with players who have different skills.
Exactly.
Not just a bunch of superstars who all play the same position.
Yeah, a good mix.
Okay, that makes sense.
And to figure out the overall risk of our portfolio,
Yeah.
we can use Monte Carlo analysis.
Oh, right. We talked about that earlier.
Yeah, but this time we're using it for the whole portfolio.
Not just individual strategies.
Exactly.
Okay.
It helps us see different scenarios for our portfolio, considering how the different assets or strategies relate to each other.
So it's like a stress test for our whole financial team,
Exactly.
not just individual players.
That's right.
Wow, we're taking risk management to a whole new level.
Yeah, we want to make sure our portfolio can handle anything.
Okay.
Now let's talk about different types of strategies.
All right.
The ebook talks about mean reversion, momentum, and trend following.
So 3 main categories. Can you give me a quick overview of each one?
Sure. Mean reversion strategies are all about betting that prices will go back to an average.
Okay.
They spot those temporary changes and try to make money from the correction.
I see.
Momentum strategies, on the other hand,
Yeah.
are all about riding the waves of trends.
Okay.
They look for assets with strong price movements, and they try to make money from those trends continuing.
So you're going with the flow.
Yeah, basically.
And what about trend following?
Trend following is similar to momentum,
Okay.
but it usually focuses on longer-term trends.
I see.
Yeah.
They give a cool example of a mean reversion strategy
Oh, yeah.
called pairs trading.
Right.
I've heard of it, but I'm still a little fuzzy on the details.
Yeah, so pairs trading is about finding 2 assets that are really closely correlated,
Okay.
like stocks from the same industry.
Uh-huh.
The strategy bets that the price difference between those 2 assets will eventually shrink. It's like watching 2 dancers who normally move together,
Okay.
but suddenly they're out of sync. You're betting they'll eventually find their rhythm again.
So if one stock goes up and the other goes down,
Right.
you'd buy the one that's down
Exactly.
and sell the one that's up,
Yep.
hoping they'll meet back up eventually.
You got it.
So it's all about statistics and market relationships.
Yeah, it's pretty cool.
It is cool.
It's amazing how many ways there are to approach algorithmic trading.
It feels like we're just scratching the surface here.
Yeah, we've only just begun to explore this world.
It's a lot to take in,
Definitely.
but it's fascinating.
It is.
I'm excited to keep learning more.
Me too.
All right, so we've covered some of the basics of algorithmic trading. Now let's see a real-world example.
Right.
This ebook goes through a simple strategy. It's called the Intraday strategy with simple price pattern.
Right.
What I liked is that it seems pretty easy to understand.
Oh, yeah. That's one of the good things about this strategy.
Yeah.
It uses a simple price pattern to tell you when to buy and sell.
Oh, okay.
So it's good for beginners.
Cool.
And the book even gives you the easy language code for it,
Oh, wow.
which is surprisingly easy to read.
So let's break it down.
Okay.
What does this simple price pattern actually look like?
Well, it focuses on the Russell 2000 futures market,
Okay.
and it trades on a 60-minute time frame.
So you're looking at hourly charts.
Yeah, exactly.
And it's designed for intraday trading, right?
Yeah, it only trades during a specific session,
Which is
from 8:45 a.m. to 3:03 p.m. Chicago time.
So it avoids holding positions overnight.
Exactly. It minimizes those overnight risks.
Smart.
You don't want to get caught by those weekend gaps.
Right. Those can be nasty.
Yeah, they can mess up your whole plan.
So tell me about this price pattern.
Okay, so it's a mirror image pattern.
What does that mean?
It means it can be used for both long and short entries.
Oh, interesting.
So you can profit from price movements in either direction.
So how do you know when to buy and when to sell?
For a long entry,
Yeah.
the closing price of the previous day has to be lower than the low of the current day's opening bar.
Okay.
And the current day's opening price has to be higher than a certain level.
Okay.
For a short entry, It's just the opposite.
So it's looking for a potential reversal.
Yeah, you could say that.
Where the price breaks out in the opposite direction of the previous day's closes.
Exactly.
So it's like buy low, sell high.
Yeah, but with a more systematic approach.
Right, we're not just guessing.
Exactly. The algorithm does all the work.
So tell me, how did this strategy perform in backtesting?
Well, the ebook shows results from 2006 to 2015.
Okay.
It averaged about $166 profit per trade.
Wow, that's not bad.
Not bad at all.
What about drawdown?
Maximum drawdown was a little over $8,000.
Okay, so there's still risk involved?
Of course, no system is perfect.
Right.
You always have to remember that.
Then we have to consider trading costs too, right?
Oh, yeah, things like slippage and commissions.
Those can really eat into your profits.
Especially for a high-frequency strategy like this one.
That's where I think individual traders might have an advantage.
Oh, how so?
The book mentions that retail traders often experience less slippage
interesting.
than institutions placing huge orders.
It makes sense. Those big orders can move the market.
Yeah, it's like a speedboat weaving through traffic compared to a giant cargo ship trying to make a tight turn.
I like that visual.
Makes you feel a little better about your chances.
Definitely.
So this is just the basic version of the strategy, right?
Yeah, the ebook talks about ways to improve it.
Like what?
Well, one thing is adding an entry filter.
Okay.
Based on the average true range indicator.
Oh, the ATR.
Yep, that's the one.
So the ATR measures volatility, right?
Exactly.
How does that help our strategy?
It helps us avoid trading when the market is too quiet.
Okay.
When volatility is low, the price pattern might not be as reliable.
So it's like only surfing when the waves are big enough.
Yeah, that's a good way to put it.
It's about being more selective.
Exactly.
Waiting for the right opportunity.
You got it.
The book also suggests a trailing stop loss. Based on the ATR.
Right.
I like trailing stop losses. They help manage risk.
Yeah, they're great.
How does using the ATR make it even better?
Well, a trailing stop loss moves with the price. Okay. So it locks in profits. But by using the ATR, the stop loss level changes based on how volatile the market is.
So it's more dynamic.
Exactly. It adjusts to the market's rhythm.
It's like a safety net that moves higher as you climb.
I like that.
Gives you peace of mind.
Yeah, you don't have to worry about a sudden drop.
But we can't get too carried away with these improvements.
Right.
The book reminds us to test everything thoroughly.
We don't want to overfit.
Right.
You have to make sure those improvements actually work.
Not just on historical data.
Yeah, we need to validate them on out-of-sample data.
It's all about the scientific method.
Absolutely.
Rigorous testing, validation, and a healthy dose of skepticism.
That's the key.
The ebook also mentions this cool concept called machine learning.
Oh, yeah, that's a hot topic these days.
It is. How does it apply to trading?
Imagine a program that can automatically create and test tons of trading strategies.
Whoa.
It can look for the best combinations of indicators, patterns, entry, and exit rules.
Sounds futuristic.
It kind of is.
Does the ebook mention any specific tools that can do this?
Yeah, they talk about Adapt Trade Builder.
Okay.
It uses something called genetic algorithms.
What are those?
It's like evolution in nature,
Okay.
but for trading strategies.
I see.
It takes your inputs, like indicators and time frames, and uses those genetic algorithms to create and optimize strategies.
It's like breeding champion racehorses, but for trading systems.
That's a good analogy.
But what about data snooping and overfitting?
That's a good point.
How do we know these strategies are actually good?
The ebook says we still need to do rigorous testing,
Okay.
even with tools like Adapt Trade Builder.
So we can't just trust the results blindly.
Exactly. We need to do out-of-sample testing, walk-forward analysis, and other checks.
So it's not about replacing human judgment.
Right.
It's about augmenting it with powerful tools.
Exactly.
Okay, that makes sense.
So we've built our strategy,
Yeah.
back-tested it, optimized it,
Yep.
stress-tested it.
Are we finally ready to trade live?
Almost.
What else is there?
We need to talk about diversification.
Ah, right. Don't put all your eggs in one basket.
Exactly.
But for algorithmic trading.
Even if you have a great strategy, it can still have periods where it doesn't do well.
Okay.
The market is always changing.
Right.
So by diversifying, we can smooth out the returns
Okay.
and reduce the impact of any one strategy doing poorly.
So we need to understand correlation.
Yes, that's key.
How different markets or strategies move in relation to each other.
Exactly.
So we want to combine strategies that don't move in the same way.
Right.
If one market crashes, we don't want our whole portfolio to crash with it.
That's the idea.
It's like building a team with players who have different strengths and weaknesses.
I like that analogy.
So it's a well-rounded team.
Exactly.
And to assess the risk of the whole portfolio, we can use Monte Carlo analysis again.
That's right, but this time for the entire portfolio.
Not just individual strategists.
Exactly.
So it's like running a stress test on our entire financial team.
Yeah, exactly.
Wow, this is getting pretty sophisticated.
It is, but it's all about managing risk.
Okay, now let's talk about different types of strategies.
Right.
The ebook mentions mean reversion, momentum, and trend following.
Yeah, 3 main categories.
Can you give me a quick overview of each one?
Sure. Mean reversion strategies are based on the idea that prices tend to revert to an average.
Okay.
They look for temporary deviations from that average
Uh-huh.
and try to profit from the correction.
I see.
Momentum strategies are all about riding trends.
Okay.
They look for assets with strong price movements
Uh-huh.
and bet that those trends will continue.
So going with the flow.
Yeah, exactly.
What about trend following?
It's similar to momentum,
Okay.
but it usually focuses on longer-term trends.
Got it.
The ebook gives a great example of a mean reversion strategy called pairs trading.
Oh, yeah, I remember that.
It involves finding 2 assets that are highly correlated, like stocks from the same industry.
Mm-hmm.
The strategy bets that the price difference between those assets will eventually converge.
So if one stock goes up and the other goes down, you
Right.
buy the one that's down and
Sure.
sell the one that's up, hoping
Yeah.
they'll meet back up.
You got it.
So it's based on statistical analysis and market relationships.
Pretty much.
Wow, there's so many different ways to approach algorithmic trading.
It's a fascinating world,
It really is.
and we've only just scratched the surface.
I'm excited to learn more.
Me too.
All right, we're back.
Back again.
We've been through a lot with this algorithmic trading stuff.
Yeah, it's a deep dive for sure.
It is a deep dive as
Yeah.
we wrap up.
Yeah.
I'm curious what really stood out to you from this ebook.
You know, it's a good reminder that this is a journey.
Oh, interesting.
Yeah, you're always learning and adapting.
Uh-huh.
What I really like is how the author emphasizes a scientific approach.
Oh,
It's like treating trading as a problem to solve.
I like that. That resonates with me. And the book really digs into testing
Oh, yeah.
all those stress tests,
All kinds of tests.
walk forward analysis.
Randomization tests.
It's like boot camp for our strategies.
Got to make sure they can handle the market.
Right, because the market's unpredictable.
Always.
Exactly.
It's not about finding that one perfect strategy
Not the holy grail.
that wins every trade.
Right.
It's more about having a solid approach
Okay.
that can handle anything.
So it's not just about chasing profits. It's
Correct.
about the process.
It's about having a good framework
Okay.
for developing, testing, and refining your strategies.
And risk management is a big part of that, right?
Huge.
The book talks about diversification, understanding how things are correlated,
Yeah.
and using tools like Monte Carlo analysis
All essential stuff.
to really assess the risk.
Absolutely.
So it's like building a diversified portfolio,
Okay.
but instead of stocks and bonds,
Uh-huh.
we're using different trading strategies.
Different markets, too.
Yeah.
Yeah, it's a similar concept.
And the ebook also goes into the mental side of trading.
Oh, that's so important.
It is.
People don't talk about it enough.
I don't.
Having a clear why,
Right.
it helps you stay disciplined.
You know your goals.
Exactly.
It reminds me of something else from the ebook.
What's that?
Machine learning and genetic algorithms.
Yeah, those are pretty cutting edge.
They are. How is technology changing trading?
Well, those tools are powerful.
Yeah.
But we got to remember, they're just tools.
Eh.
They can help us do amazing things,
Ah.
explore new ideas,
Yeah.
automate tasks.
But they can't replace human judgment.
Exactly.
So it's about finding that balance
Right.
between intuition and algorithms.
Using technology to make better decisions.
Not to just hand over the reins completely.
I like that.
Yeah.
Well said.
This has been a really insightful look at algorithmic trading.
It has.
And it feels like we're just getting started.
Yeah, this is just the beginning.
As technology keeps advancing
Yeah.
and markets keep changing.
Algorithmic trading is only going to get bigger,
Yeah.
more sophisticated, more accessible.
That's exciting.
It is. There's always something new to learn.
So for someone just starting out,
Yeah.
what advice would you give them?
I would say embrace that scientific mindset.
Okay.
Really try to understand how markets work
Uh-huh.
and never stop learning.
That's great advice.
This isn't a sprint, it's a marathon.
You've got to be in it for the long haul.
Exactly.
Well, thank you for joining us on this deep dive into algorithmic trading.
My pleasure.
I hope you learned something new today.
Me too.
And to you, our listener, keep exploring, keep learning,
Yeah.
and remember, the best investment you can make is in yourself.
Absolutely.
Until next time, happy trading.